Welcome back, Don. Great to have you. Don does his work on barchart.com, and
Thank you, Dale.
that
Appreciate it, and happy to be back.
that has plenty of visibility. It's a great site. It's been around for a long time, and they don't bring people on to do analysis that don't have value added. So, Don, what's on the docket today?
Well,
What do you think?
it's kind of fun. I was listening to you guys talk about the currencies here for a little while, and I'm a longer time frame trader, right? Daily, weekly type of
Right.
thing. And I
Yeah.
tell you what, interest rates and currencies have been the biggest bear or pain in my butt for 2024 and part of 2023. And I just like, man, how are you guys making money in that? I'll never know. But it's good to see somebody is because on the daily charts, they just don't trend as well as they were doing, say, a year and a half ago. But
Yeah.
I just
A
over
little
trade.
more chop.
Yeah,
Except for the yen, a lack of volatility. Really,
right.
we've been moving sideways in the dollar for a while.
Yes, we
So,
have. Yeah.
where are you seeing trends, Don?
I wrote an article here. I'm just gonna, if I can share a screen, I'll pull it up
Sure.
here real quick,
Go ahead, buddy.
and let's see, I'll just go here and share. There we go. And this was one that just came out last week, and I just put it out on bar chart, and it was on the crude oil market. And, crude oil's been following a very, very good seasonal pattern all year long. And I've been pretty impressed with the way that thing has been sort of meeting all the peaks in the seasonal patterns for the year. And just at the beginning of it here, I just kind of put in some information here about some of the fundamentals that are behind everything. And, 'cause some of the API and the EIA reports that have been coming out. And they were, there were some days we were coming in, they were looking a little bullish, but overall, it doesn't look all that strong. So there's some stuff that had been going on overseas as well. I mean, I think Russia was, or I'm sorry, Ukraine attacked one of Russia's big
Yeah.
oil export areas. Israel attacked that Yemeni port. It was just amazing how many things were really bullish for oil to take
Tankers,
off and run.
tankers,
Yeah,
tankers exploding. Yeah.
yeah, but oil didn't go anywhere. It literally went down.
No.
It
Yeah.
went up and then it just been down, down, down. And I found in my history is when markets have that kind of a catalyst to go somewhere and it doesn't, it's usually that market's pretty weak in this case because in my opinion, and I know news is, can be a catalyst for things, but that was two pretty big things that could have impacted supply and it really didn't push oil any higher. So that I thought that was pretty bearish. And when you tie it in, like right here, I took and overlaid, this chart here, I'll come back and I'll show you this is the actual seasonal pattern for crude oil here. So taking what crude oil has done this year, and the green line here is the seasonal pattern, a 15-year pattern for crude oil. And this is my favorite one right here. We've talked about this on your show before, but when you get in oil back here around this December timeframe right here, it usually rides on up until around 1st of May. Beautiful trade. And you can confirm this each year by looking at something called a commitment of traders report. And what you're looking for here is to see on the commitment of traders report, you want to see the producer processors in there. It's actually the refiners who are doing the buying because they're getting ready to buy oil for the upcoming driving season. But you want to see them very bullish, meaning that week after week, they're buying oil. And if they're doing that along about this seasonal period window, it's a pretty good sign that we're going to have a good run. And obviously, I look for a trend to turn up as well. And once that trend turns up, the commercials are buying, I'm all in. It's just been a
Yeah.
really good trade to follow. And then it peaks out around that May 1st. And then this green line shows we're just going down here until about June sometime. And when you look at the actual prices of the September contract, that's exactly what we did. We bottom out. And remember, these transition areas here are within, say, a week or two, something like that. They're never precisely on the same day, right?
Right.
But somewhere's in the general area. And then we rally back up. And basically, it usually comes back up and retest that May high back in here. Sometimes we go a little bit higher, sometimes a little short, like we did here. And now you're seeing this pattern is starting to roll down. And the price action is rolling down as well. And when we come down here and look at this, it's a very similar pattern. So here's the same concept from January up to that May timeframe is that bullish move that we see. And then we get that same move down, this one right here, right? And that's happening. And then we get this move back up. You see, in 15-year history, it comes back up here. Like I said, sometimes it makes a new high, retest this, or it comes up a little shy like this one does. And that's what we did this year. And notice we're starting to see the price drop off here and we're dropping off here. And so basically what this is happening here is, I think it's August the 22nd, somewhere's in there. I had it written on here somewhere, is around the last trading day for oil.
Do
And
you launch fresh money at shorts after this kind of decline we've had, or do you wait for a rally?
Rallies. Yeah, I sell into resistance in a downtrend and I buy into support on uptrends. So yes, I have a hard time sort of trading breakouts because I'm not a very good trader at that. I tend to buy highs and sell lows when I trade breakouts, but I just my strategy just isn't conducive for that. But basically what this is doing every year is it's selling off into the expiration of this September contract, which is around August 20th approximately. And it's just a pretty consistent pattern right here. So I'm just looking for, some selling pressure coming in here in the market. One of the things I'm looking for too, I'm just pointing out, if you go back on your charts and even some of your, like the US dollar index, for example, when the assassination attempt was on Trump last week, June 15th was the first trading day, right? Or July, I'm sorry, July 15th coming in. And when you take that July 15th, I take like that opening price on that daily chart, because that was the first time people could trade on that Sunday night, for example, and just put a line across across your chart, and watch how that particular line acts as resistance or support. And it's in the dollar index, for example, we've gone away from it, come back, and we're just kind of hovering right around where we opened on that July 15th right now. It's like the Trump trade is what people have been talking about, right? Like current crypto and stuff like that took off, and that is staying way above that July 15th date, which is very bullish for crypto, in my opinion. So anyway, it was a very significant day in our history, right? And the markets took it as a significant day as well. So I use that sort of like a line in the sand in some of these markets. And the July 15th was somewhere back over in here. We poked above it a little bit and couldn't close above it. Came back down, came back up and retested it, and now we're working our way lower. So with Trump, for example, it's drill, baby, drill, right? So if that man does get elected as president, we'll see a whole lot more oil coming out. And I'm not looking that far into the future with this trade, but in the back of my mind, it could be that traders are anticipating some kind of bearishness coming, depending on how the election goes going forward. So it's just kind of a bearish environment for me in the sense of crude oil, and I think we just got a little bit lower to go in this market.
Well, all commodities until recently, except gold, have the CRB's been under pressure.
Yes, yeah, I agree.
Grains haven't done it. Copper has collapsed.
Oh,
Hey,
yes.
hey, good morning, Don. Dale, I just want to say your microphone's kind of light right now, buddy.
Okay.
Sorry. Okay, much
Thank
better.
you.
Thank you.
All right. So Don, the rest of the board has been under pressure.
Mhm.
And it's not because we have a runaway strong dollar either.
It isn't.
So,
Right.
so I mean, do you feel like we have a deflationary impulse coming, and is it coming from China?
Yeah, well, kind of. Well, they had to cut their interest rates with this week,
Right.
trying to stimulate their economy, which tells me they're certainly not importing like they're going, they had been, right? So their economy is certainly not strong. Our government's getting ready to cut interest rates. What our central bank is getting ready to cut them in September, right? Europe is already in recession, or at least Great Britain and so on like that. So, if the world economy is going into that recession period, basically is what it seems like, because why would a country be cutting interest rates if it didn't see signs of slowing down? And that's going to impact commodities. And plus, commodities went through a boom and bust cycle. I think we talked about that on one of your shows, matter of fact, how markets, when they go to all-time highs like they did with the grains and with oil and stuff like that, when they go back up to these all-time highs, they typically go from a production cost, I'm sorry, from that boom, which is the high price, and they come back down to approximately the production cost. I just wrote an article on corn about that recently, and that was a great example. We went all the way up to the $8.41 area, approximately.
Yeah.
All new highs up in there, and then from there it's come all the way back down to like $4, well, basically
Yeah.
$4 basis December. I wrote an article back when it was up around near closer to $5, and I said, which is first, $6 or $4 or $3.20? And boy, I had a lot of pushback on that one, but that's what it's doing, and the commercials are very happy to sell. And this is a very interesting point down here, is because like in a market like that, it gets oversupplied, and that's what happens when you have a boom type of a market. And that's what our commodities went through, was that super cycle in commodities recently. And when that kind of a thing happens, everybody and their brother tries to go and produce these commodities, and then it just gets oversupplied too quickly. And so the market has to clean all that out. It's almost like retail traders jumping on a fast moving market up, right? And then the market seems to want to come back and cleanse that out. Same
Yeah.
concept with here is what I'm referring to.
Do you think we're getting close? I'm seeing some indications that we could be getting some type of bottom developing in corn.
You know,
Corn looks okay.
I would say that, but it's just, here's the problem with it. When you look at the commitment of traders report and we look back, the average price to produce corn this past year and was something like around $5.10 or something like that. That's what it cost to produce the corn, right? Then this, as we had carryover into right now, for example, from last year's corn crop, there's 16% more corn in farmers' elevators right now than last year, which is a record high number of corn, and it hasn't
Wow.
been priced yet. And how you know that is, one, you've heard from people who in that business talking about it, and the other is when you look at a commitment of traders, you can look at the year over year short positions on the producers, for example, and we are almost 150,000 less contracts than we were this time last year. And normally we should be up a much higher number of shorts because the producers would have sold into the spring rally, but they haven't priced that corn yet. So now we have managed money at record shorts in the corn market. We have producers just dying for any kind of a rally, and they're going to sell into that rally. So that's two of the largest market participants we have who are waiting to sell more. So this market, I think, has got lower prices to go. There's no bottom in corn yet.
Okay, you have a view on risk with what just happened here, Don, in the last couple weeks with the superstar Mag 7. I know you watch market phenomena, and that has definitely been a phenomena. You
Yeah,
think they broke the back of them?
I think, yeah, let's just say I don't think they're going away, right? Because they're just
Yeah.
we're so dependent on that technology, for example. But I think they just I believe somebody on your show had just mentioned earlier, like with gold, it just gotten too far ahead of itself, and the market just needs to be cleansed. But what was interesting was the well, it was God about 3 or 4 days before they actually broke. Something I like to watch is the I don't know if I can find that here. Let me pull this up on the screen really quick.
And someone's asking, Don, does bar chart have a new filtering provision?
Ooh, filtering for, I'm sorry, filtering what?
What are you asking about, Barry? Filtering on what? If you're still here. Go ahead, Don.
Okay. Here we go. 50-day. There you go. So what this is a chart of the S&P 500. It's the number of stocks above the 50-day moving average. All right. And this is what I like to watch here. Basically, when we're trading above the 50, for example, it's market. That means there's more stocks above the 50-day, 50%
Right.
of the stocks are above the 50-day moving average. And you can see here, and when you look at your daily charts and stuff, you can see we were pretty bearish on price back in here. But this happened a couple of days before.
That was the Russell. That's
Yeah.
when the
And so
CPI. Yeah.
yeah, so when those guys they started to rally up, okay, and what was interesting was we had a day where the S&Ps and the Nasdaq were down something like
Right.
1.5%, 1.75%. And this thing took a huge jump up. Now think about that. That means, because remember, those are just a 7 when the S&P and stuff does that. But when this thing makes a move like that, this is the whole 500 S&P stocks making a move. So that's when things like that average weighted balance, or what do you call that? The equally weighted RSP ETF, for example, had a magnificent day. The next day, the Russell and the Dow futures were kicking in as well. So I really like to watch this thing to give me a pretty good clue internally like that. So this was a tip right here to me that when these things broke hard and the S&Ps to the upside and the S&Ps were down and the Nasdaq was down, that was a rotation getting ready to start going into some of these stocks that have been beaten down to the bottom, 100 of the S&P 500, that they're now starting to get bought up and turned around. So if you notice the RSP or I'm sorry, the equal weighted indexes and stuff like that, they've been hanging in there on this sell-off. Even the Dow hasn't come back as bad as Nasdaq and S&P, but I think it's got to cleanse that Magnificent Seven out of there.
Okay. All right.
I don't know how far it'll go. It's hard to say, but
Any view on gold?
Gold has just been sideways to me. I mean, I know we've had a couple of hard breaks here, but when you look at it on a bigger chart, let me just pull this up here really quick. It really hasn't.
You've been around for a while, and I talked about this with different people when we talk about gold. When China came out and said they didn't buy any gold this month, and they did that twice, and they took gold down $35. You think they did it so they could buy at a better level?
It's funny you say that, Dale. China is so known to do silly stuff like that. You know, they do
Yeah,
that in grain markets as well.
I know. For
They
years I've
make
been
a
watching it.
Yes,
Yeah,
they make a tender for soybeans or corn or whatever it is.
yeah,
And all of a sudden now when they make that tender, the market hears about the tender and then to them that's taking supply out of the market. Well, it haven't been delivered yet, but that's an intention to buy. So the price rallies on that because of taking the supply out of the market.
right.
Then China will go along
They
for a few
sell
weeks
into
to
it.
come in, cancel it, right? And then price
Right.
crashes down further than where it was, and then they come in and buy it again. So no, I would not put that past them to tell you the truth.
Okay.
But
I was just wondering what your thoughts were on that.
yeah, I
I
think that's
mean,
just one of their
I
games.
don't think they're, trying to become a country of transparency.
No, no.
Yeah. Anyway.
But with this gold chart, when you're looking at this stuff, I mean, you can see back in here, we got going back to what April. It's just
Yeah.
literally sideways, in my opinion. We just
3
got to
drives. Yeah.
Yeah. So, I think we're just stuck in here for right now. And maybe after the election, I think a lot of these markets might start showing some trends one way or the other, up or down. I have no idea. But it's almost like these markets seem like they're sitting on their hands in the bigger picture right now until something happens. And there needs to be a catalyst coming along here somewhere.
Iran.
Oh, please, let's hope not. But you never know. But
Netanyahu was here.
yeah,
He's
I
been
know.
pleading that case forever.
I know it. And what was it last week? They announced Iran announced they were only a couple weeks away from getting that
Yeah.
enriched uranium or something like that.
Yeah.
So,
Yeah.
I don't know.
Okay. Well, anything else you want to cover?
Not really. I'd
So
like to.
sell rallies in WTI.
Yeah, and
Seasonally
corn.
weak for
Yeah,
another month.
I think corn and WTI both just selling rallies would do you well. And don't listen to all these top and bottom pickers because I mean, you can pick tops and bottoms, but there's only one real top and one real bottom in every move, right? But how many false ones are in between that? And if you get caught up in those false ones, trying to pick them all the time, by the time the real one comes, you're usually so beat up you can't pull the trigger to take that one. So
Yeah,
anyway,
they really haven't. Yeah, they haven't beaten me up to that extent that I've given up.
yeah, you're one of the
Uh,
fortunate ones, Dale. Most people give up on that.
uh,
I love the trend. I love my trend.
anyway, Don, great talking to you. People find you on, show them where they could go to barchart.com to
Okay.
find you.
Yeah, it's I just write these articles for them about once a week, and then do some of the podcasts and
Not
so on.
just, not
Well,
just.
I just
You
I
just.
writing. But anyway, if you're on the barchart.com's website right here, there's a tab up here called News, and if you left click on that, then you come down over on the left side, it says featured authors, and then down here, about fifth name down, there's my name is Don Dawson. If you just click on that, it archives these going back as I think I've been with them almost 2 years now. So all my articles that I've written, and what I do is I try and give information in here about how I use seasonality, how I use the commitment of traders report, and so on like that. It's in our free articles, and if you want to follow me, you can just click up here where it says follow this author. It's all free, and they'll just send you a link every week when I send out a new article. And basically, I enjoy writing it. It kind of helps keep your finger on the pulse of multiple markets and stuff like that. But this corn market, I've been on top of this thing since way back when corn price, here to go. It was the corn prices sub 325 before 6. Boy, you're talking about, I think normally I see around 2,000 some hits or so, something like that. This one went to 13,000. So it was
Controversial. Yeah.
Oh, it was pretty controversial. It really was. But
those are the ones that get the hits.
Yeah, it really, but it went
well, I know Alexander Furnace said that, he referred you to me and respects your work, and he wants you to put in your will that he inherits all your seasonal stuff. He wants to inherit your seasonal stuff.
I might have to do that. He's a good guy. He's a good guy. He
is a good guy.
He is. I like him.
All right, buddy. Well, don't worry about me. I'm taken care of. I'm a one trick pony in the markets anyway. So really appreciate you coming in every 3 months or so, Don. And people, you want to learn about seasonals, here's a great source. Okay, Don is a great source.
Thank you
So,
very
you
much.
know, go to bar chart and check his stuff out. If you keep an open mind, you'll keep your account open.
Oh, that's
And
a good line. Yeah, yeah.
yeah. All right. Well, thanks, Don, my trading warrior brother. And that's a wrap. Remember, everyone, don't just count your pips, count your blessings. And I know this is Think a Lot Thursday. Try not to think a lot today. Okay. And just trade the action. And we'll see you tomorrow. You know, I have Pedro tomorrow. Pedro used to be with the Wall Street Journal. He's with Market News International. Pedro Jacosta used to be at all the Fed press conferences. Anyway, should be a great interview. Okay, who did he speak to? Uh, well, anyway, yeah, Sheila Blair. Okay, so it's Sheila Blair has seen a lot of things come in advance, so I'll be able to talk to Pedro about those things tomorrow. So see everyone for TGIF. Good luck the rest of the day. Uh, be part of something bigger than yourself. Join the community. Adios.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.